Hey Manoj, how are you?
I'm good, Mukund. How are you? How's everyone else?
Happy weekend.
Yeah, you too.
Thank you. Um, Good. It was a terrific week. How was your week?
From the market's point of view, it was really, really great weekend, great week because I actually was expecting some correction. It although started, but I did not expect the sell-off that happened after the Fitch downgrade. So this sell-off was something of an eye opener for me as well. I mean, from news perspective, many times we have seen that markets do not react so negatively, but this time it was different. So I think something else is brewing in the market, but let's go day by day and let's see how it goes. But it looked like terrible for now.
But you remember 2 weeks ago, we have been warning about a break
Absolutely.
in, or at least I wouldn't call it a correction as much as a pullback that was
Right.
required. I
Right.
think, in my perspective, the Fitch downgrade and the reaction to that was just an excuse to go down. It wasn't so
Absolutely.
much that Fitch downgrade drove it. It was like we wanted to go down.
Right.
It could have
It
been
just
as
got
simple
triggered.
as the weather was too hot in California, so market has to go down.
Right.
But last week was good. Just to give you context to wrap up from our last week, we mentioned five companies. Arista Networks, phenomenal earnings. The stock went from 152 when we alerted all the way to 177, 180 actually, 179.6. Terrific earnings from Arista Networks. Did very, very well on that trade. And then the second earnings that we had talked to you about was Confluent. Very good earnings, $189 million. And they are actually getting to the point where they will start to, you know, churn cash as well. 34% growth was what they said they would do. They ended up doing 35%, 36% growth. Upwork was a surprise. I hadn't mentioned it, but Upwork went up 40% to 50% after earnings. They had very, very good earnings and they went up as well. The other ones that went up last week, Amazon did have a terrific earnings, as you can remember, $134 billion plus a very strong EPS guide as well. And then finally, the last two that we had mentioned, DraftKings, Cloudflare, both of them doing very well. So overall, we had a fairly good earnings report. The five stocks we mentioned, all of them were very good. Let's just quickly get a summary of where we are from a market, from SPY, IWM. Let's look at QQQ and DIA. Let's see where we are from a market perspective. Let's start with obviously the SPY or
Right.
mini futures on the S&P 500.
Right. So here we are. Let me just go with the daily chart first, and then I'll go over the hourly. So last week, as we were talking about that, I'm expecting markets to actually give up on the 20 MA and maybe retrace back all the way towards the 50 MA. We indeed gave 20 MA on the Wednesday after the Fitch downgrade. And then for the previous 2 days, which is Friday and Thursday, we were actually in the formation of a consolidation wherein it was forming inverse head and shoulders on the hourly chart.
Yeah, that would have been good.
That resulted in a breakout and then failed again. So here is something that I want to tell our viewers. What I want to tell them is technical analysis is not a perfect science, it is an art. So it is not always A plus B equal to C. Sometimes it is D, sometimes it is E, sometimes it is F. Sometimes it is perfectly something different. So what we need to do is we need to take each and every day, each and every pattern as a new pattern, new day, and new analysis as we go along. So if you look at this, it could also become some kind of a flag. So it was a bear flag. So bear flag broke down. As against the inverse head and shoulders, there was also a bear flag which was forming, which broke down and then resulted into a big drop in the S&P 500. So what I will suggest is don't always look at it from one single perspective. Try and change your perspective as and how the markets progress and markets move forward. So yes, markets fell. Markets fell big time when Fitch downgraded US ratings, and then what we saw was a typical what we should see in a extended market. Markets were way too extended, and what we see is a weekly candle way too red, which is a dark cloud cover. What does it mean? It means that the next few days are also not going to be easy for the market, at least for the next week. I would expect
What is
at
the
least.
On the daily chart? What is the mark on the 50 MA?
So 50 MA is, give me 1 second.
For
Expected around, so for now it is 4435. Maybe by Monday, Tuesday, it will be somewhere around 4450, something like that. So I would say somewhere around 4450, it should 445060 should be somewhere, we should see some pause and then let's see whether it wants to bounce back from there. Most of the times, 50 MA and 200 MAs normally results into a breakdown and then bounce back. So don't be surprised that markets actually breaks down to 50 MA and then bounces back from there. So maybe breaks down, tries to touch somewhere around this lower end of the channel and then bounces back.
Got it.
The bounce back needs to be sustainable. It cannot be just 1 day and 2 day and then we dilly-dally. It should be a sustained bounce for 2-3 days. If it dilly-dally and we just remain there, then there is a risk of breaking down of this channel as well.
Just like the breakdown also needs to be sustained, right?
Absolutely.
A couple of days or last 2 weeks, we've had some down days, but it's not sustained.
Right.
Look at the daily chart. It goes down one day and then goes right back up. Goes down one day,
Absolutely.
back up.
Every day. In fact, in this entire rally, 1 or 2 days sell off and then bounce. 1 or 2 days sell off and then bounce. This is the last entire week has been the sell off, which is a sign that market just does not want to stop it. There is more to come. Right.
We had 4 down red candles.
Absolutely. Not just S&P 500, even NASDAQ as well. So let me just try and go to 4-hour and the hourly chart so to give more perspective. This is 4-hour chart. This green channel has been broken down, back tested, and then again broken down again. So it is again actually going further below, but it is also forming a bull flag. Whether this bull flag sustains or whether this breakdown sustains is something to be seen. For that, we need to go and see the daily and the weekly chart. What does the daily chart suggest? Daily chart suggests that we are almost close to 50 MA on the NASDAQ, which is a very positive sign and healthy sign. So I would expect somewhere around 16,000, 15,200, 15,180, somewhere there kind of a level. We should try and stabilize on the tech stocks at least. We will talk about those tech stocks later during the call, but from the NASDAQ point of view, it does suggest that somewhere around 15,200, we should try and pause and then maybe see how it wants to go, whether it wants to give up on the 50 MA or whether it wants to sustain.
But Manoj, if you look at the QQQ index and look at the SPY index, the top 8 companies are the same.
Right.
And their allocation is the same.
Right.
Not allocation is not the same to the T, but the stock, Apple is number 1, Microsoft is number 2, Amazon is 3, or Google is 3, then Meta, then Nvidia. Then that's 8 companies that have been driving both QQQ and NASDAQ and S&P 500. And when you look at that, the question I was being asked yesterday by one of my friends was, what drives what? And it turns out that the tech companies are driving both indices.
Absolutely. And we cannot just overlook the stocks and then look at the indexes. We have to look at both, because many times what happens is, even if those stocks are leading from the front, there are chances that the other stocks which are collectively, maybe those 20 stocks are in one particular sector, they could be starting to take a lead. If we cannot completely ignore the indexes, we cannot completely ignore the leaders as well. So we need to keep an eye on both the factors together and then see where the market is headed.
Yeah. Okay.
Yeah. So this is the NASDAQ. So I would expect somewhere around 50 MA and then see probably Monday and Tuesday we should be able to see on the 50 MA on NASDAQ, which is QQQ, and then head from there.
So in your perspective, you're saying the SPY is a little bit more bearish than NASDAQ? NASDAQ seems to be closer to the 50 MA. Okay.
So here is the catch. Many times what happens is we assume that it should actually touch 50 MA. It is not necessary. There are cases where it does not even go all the way to 50 MA and then bounces back. And when we look in the hindsight, we say, oh, it was almost there. So it may not go all the way to maybe 4.5. It may rally from 4.6070 as well. You may never know.
You can see in June 20th or something like that, you see those 3-4 red, green.
Right. So it did not go all the way. So it was here. It was here. See, it was here. But after that, it rallied and then came all the way to almost close to 20 MA, then rallied again. It wasn't 20 MA touched. 20 MA was not touched. It was close to that and then it bounced back.
Yeah.
In May, not June. So June is just 20 MA, not close.
Yeah. No, I'm saying it went to the 20 MA and bounced off of that.
Right.
There are many times we see before it has gone below the 20 MA but not touched the 50 MA.
Right. So it may not. So again, as I said in the previous or maybe previous to that call, that for quite a few times it will be first the 20 MA test for at least 5 to 7 times if it is a sustained bull market. After those 5 to 7 times, it gives momentum starts fading, and we can see MACD that it starts fading. it will make few more highs and then test the 20 MA and then it will give up. So 20 MA gave up, momentum has gone. RSI is also negative. So RSI and MACD divergences are negative. Markets are showing the signs of fatigue, and then here it does not make new highs. So it made new high, and then it stops somewhere here. This was the first sign, and second sign was not a sign for anybody. It was in market did not give anybody a chance to sell. That was a fish downgrade.
Yeah. Okay.
Yep.
All right. Let's go to DIA.
Yep. So here is DJI. So I was bullish on this, but market had some other plans because of the fish downgrade. Everything's changed now. As of now, it does look like it still hasn't given up as much as the S&P 500 and Nasdaq, but yet it is not bullish. Look at the previous candle; it is inverse hammer, not bullish. If you look at weekly, again not bullish. It is completely overshadowed the previous, which is like bearish engulfing candle, which is not bullish. So I would expect again on the Dow Jones as well to try and sell off and try and go all the way towards maybe 50 MA or somewhere around the top of these two, which is slightly smaller. So I would call it as a 4-hour demand zone. So this zone, this area is a 4-hour demand zone, somewhere around 34,700, 34,800. It might give us some bounce. Again, you will have to see how other stocks and other indexes fare. But industrials which had signs of strength earlier now also showing signs of weakness because of course overall market is not sustaining.
Well, you look at the market in July. Look at the number of green candles there.
Yeah.
This
was something different. This is I have not seen this kind of a rally ever in Dow Jones, to be honest.
That was 13 days in a row, and then we had a little bit of a break. But okay, right. All right. That's on the DIA.
And now Russell.
This looks like
similar to Dow Jones, which is it was trying to sustain for the last 2 days around the 20 mm, but again it gave up. Finally, it gave up, and now probably heading towards the lower end of the channel as well as this 50 mm. Now, if we look at from the weekly perspective, what it also tells us that this breakout would it result into a failed breakout. Now, if it indeed turns out to be a failed breakout, and if you also give up on this channel, it is going to be very, very bearish for me. I would not be holding any of my small caps beyond this channel. If we break out on this channel, and also we are below this this big resistance which you broke out of, I would not be holding any of my small caps. That's a very bearish time for me. Again, whether we break down or we sustainably go down, there is something for us to see. As I said, technical analysis is not a perfect science. It is not A plus B equals to C always. It could be D, E, F as well. But for now, that's a first sign for me that, hey, I do not want to sustain here. I want to go down. So I will be very careful there.
Got it. Okay. Let's quickly now switch gears to next week's important earnings. I'm going to share the screen. There are about 40 or so companies that I am tracking that are having earnings next week.
40 companies. How do you get your head around that?
Well, remember, I always track it in the simple spreadsheet, right? I know exactly which ones I want to track in a high level, which ones I don't. Even last week, this is from last week. The yellow, the ones that I have highlighted in yellow are the ones that I'm really, really interested in and I'm watching. And the rest of them, it becomes just easy. And I've automated a lot of things. The data just comes in directly to the spreadsheet, so I can quickly.
That's the benefit of being a techie.
Yeah. So the ones that are important that I'm tracking: Palantir, Lucid, Datadog, Global E, GLBE is a symbol, Rivian, Upstart, Duolingo. So the ones that I am going to definitely watch a little bit more closely, there are 4 of them that I think will do fairly well, and I'm going to definitely watch them closely. Next week, as you had mentioned as well, trading is going to be a little bit tricky, given that August and September tend to be a little bit of a weak month overall for stocks. But given that the case, I'm definitely interested in Datadog, Globally. GLBE is the ticker symbol on Globally, and then Duolingo are the 3 that I have definitely been tracking for quite a while, and I will continue to track. And then there's one company I wanted to mention. I know we're not going to show the chart. We're not going to go through that in detail, but the company is going to report on Monday morning, Manoj.
Okay.
And the company is called Genius Sports. I know a lot of people are big sports fans.
Mm.
Genius Sports does is they collect live game data, scores, stats, and they distribute it through API to a lot of websites or a lot of the sites that do um, fantasy gaming, the sites that do gambling. They are a data business. And the company is going to report earnings on Monday morning before the market at 5 o'clock Eastern time, 8 o'clock Pacific. The market is expecting about $97 million in top line. The company is still losing money, about 12 million or so on the bottom line. So they went IPO via SPAC 2.5 years ago. A lot of the SPAC names have gotten beaten down quite a bit, but this is an interesting name to watch. It's still not on my I want to buy this list, but it's an interesting name to watch nonetheless. It's a very interesting company. Okay, so we have a bunch of larger companies, Amazon, Apple, Microsoft, Nvidia, Meta, that we were going to talk about from a chart perspective. Let's just quickly go through some of them at least, or as many as we can, to be able to show what we are seeing in the trends. Let's start with obviously Amazon. Terrific earnings, really good work. But where are we looking at from a chart perspective?
Okay, so normally I avoid going or having a view on the cult stocks. For me, Amazon, Tesla, Nvidia, these are all cult stocks. So I normally do not give any view or have any view or buy share to talking about the charts. But this time many of these stocks are showing signs of weakness from the technical perspective. Look at this chart. It was a big gap up yesterday, Friday. This gap up should have, it was a terrific earnings, and this should have resulted into sustenance of the stock as well. But this, along with market, stock sold off. Where did it land to? It landed to exactly at the top end of the channel, one. Secondly, it is a weekly supply zone where it could not pass through. This 144 to this area of 144 to 145, it could not sustain this level.
So Manoj,
what does it tell you? It tells you that there is supply at the upper level. Markets are not sustaining. And look at MACD. Amazon made new high all through this particular period from June to July. So entire July, momentum was not favoring the bulls, and hence what we saw yesterday was just a sign of momentum completely going against the bulls. So I would definitely, if I was, I'm sorry.
Let me ask you something, Manoj. If you look at yesterday, the stock was up 8.25%.
Right.
So this is a daily chart.
Right.
This is an interesting thing that a lot of people ask me and people get confused. So you look at a candlestick chart. It is supposed to show the color green when the stock ended at a higher spot than where it opened.
No. So it opened it opened higher than the day before yesterday's close, but it closed lower than yesterday's open. And hence it is showing as a red candle. So you can change it in your settings, and the color would definitely change from red to green. But forget about the red and green candle and look at it from the point of view of where the high was, where it closed, and where it opened, and where the low was. This entire body of a candle, it gives you a lot of things for you to understand. What does this candle show me is sellers were ruling the market for the day at higher point for the entire day. For an entire day, if the stock is under pressure, it tells me that market has some more selling pressure for the next couple of days, at least, if not more. I'm sorry.
No. I was going to say, the reason I say that is because a lot of people look purely at the color of the candle and they say it's bullish or bearish. This one tells me it is bearish, somewhat, but still on the day it went up $10.
Right. So from day before yesterday's point of view, yes, it has closed higher than where it was day before yesterday. Yet from the high point of the day, it was a continuous selling pressure. This inverted hammer tells you a very clear picture that there were sellers at every high when markets try to go higher. So even if markets were higher than day before yesterday, but sellers were ruling for the day, and for the day means this kind of sellers will continue to come forward in the next few days as well. There is just one perspective, but look at the overall other perspective as well. Where did it land up? It landed up at the channel. It landed up exactly under the supply zone. At the same time, RSI is negatively diverged. Momentum is negatively diverged. So these are all combined together, tells me that next few days does not hold good for bulls. It is for the bears, and hence if I was holding the stock, I would actually temporarily exit and buy it again at the lower end. Because
Or
I don't
I
know
would
whether
just
it is
sell.
going to go lower, far lower, but definitely is not going higher for now.
Or I would sell covered calls.
Yeah, definitely, yes. Covered calls would be,
If you're
be a
holding it, if
great
you're
bet,
holding it, I would
yep,
say the best strategy is to sell covered calls.
absolutely, absolutely. Especially in this kind of markets when you know that markets are showing sign of weakness, sell covered calls and cover some of your costing of the stock.
Okay, all right. Let's go to the next one. Apple or Tesla.
Uh,
There you go.
okay, so Tesla it is.
Hit the 50-day MA.
Okay, so it is very tricky for me to be honest. Weekly bearish, and so last week we spoke about it last week that the stock actually retraced exactly from the supply zone. That was just one aspect. Now on the daily chart as well, it has actually broken down off the 20 MA. It is almost close to the 50 MA. But I would not be, very bearish at the 50 MA unless and until it sustains. So for me, the sustenance would mean that, hold a second, where my mouse is not here. Okay, here it is. Sustenance would mean that we should go lower than this previous low. One more thing is it is giving you kind of a head and shoulders. I would not say exactly head and shoulders, but it's giving me some kind of a head and shoulders picture. This is one. This is head. And this is almost a right shoulder. So probably, again, it is not necessary that it is forming, it may or may not form, but looks like it wants to form head and shoulders. If it forms and it closes below this entire zone, then it has further way down. Then maybe we can go look at it maybe 200 MA, which is wow, which is at 200. Let's see. And again, then there are these
200
demand
MA.
zones of
200 MA.
208 and 218. So that kind of level could be seen if we break below these levels.
The 200 MA is 190, correct?
It is here. Yeah, 195.
195.
Yep.
250 right now, 195. That's a 50-point down.
Yep.
That's almost 20%.
20%.
Yeah, yeah. We will see.
As I said, this is a cult stock. I would not be, holding this view as the sacrosanct and the exact science. It could completely do something else. We have no idea.
Okay, all right.
Okay.
Apple,
Now there is a reason.
Apple to me clearly is take a break from. I sold all of my Apple.
Wow, I saw your tweet. You said you 50% in cash. Wow, that was something.
Well, remember, I have very long-term holdings in Apple, but I had a trading position as well, all the way when I bought it in March.
Right.
So I rode all the way, and then all the trading position, I sold it.
Interesting. Okay. So I have been, having this view that this is actually a rising wedge. Now forget about rising wedge and just look at the chart. Look at this weekly chart. Forget about all the drawings that I have drawn. This non-stop rally had to come give a break. This break came off suddenly when earnings disappointed. Now let me go a little bit further and give you a monthly perspective. I had this view and I have been talking about this view on my blog. The chances are markets will make a new high in most of those stocks, and chances are markets will make a new high even in S&P 500 and Nasdaq and Dow Jones. But momentum and RSI would not be favoring from the monthly perspective. This is exactly what Apple is doing. It has broken previous high. It has gone farther, made a new high on the charts, on the prices. But where is MACD? Far, far lower than where it was last time. It's a very bearish sign, and I would look at it very scarily, and chances are that previous low would be broken. Previous low was 120.
Here's the thing, Manoj. Even the fundamentals point to a break for the next 3 to 6 months. I mean, in the last earnings, which was day before yesterday, they said that expect. So Apple had a 2% revenue dip last quarter, and they are not expecting that to get any better for next quarter. So at least until September, I would not be bullish on Apple. I'm not saying you're not going to be bullish on Apple in the long term, but there are a lot of people on CNBC saying, oh, this is the best time to buy Apple. I actually think it's going to get to the 150 zone.
Yeah. 150 and maybe lower. So 150 is where the 158, 160 is where 200 MA is. It could be maybe somewhere around 165 by the time the stock reaches there. And then, so again, even if we expect the stock to go lower, it would not be in a straight line. Just the way it wasn't in a straight line when it was going up, it won't be in a straight line when it is going down as well. It will rise, it will fall, it will rise, it will fall, make a new lower low and lower high as well. So that's how we have to track the stock and start trading accordingly.
I know a lot of my guys who share with me on the group. A lot of people are buying puts on Apple for 3 months, 3 months out puts.
That's really nice. I mean, they so
And
3
Apple
months
is a
are they buying
difficult
this
stock.
and they will be buying maybe next year's puts because
And
the
Apple
stock
is
has
a
been going up for
difficult
last 3
stock
months.
Apple is a difficult stock to be negative on, but you know,
Absolutely.
it is what it's gone up quite a bit though. Okay,
Right.
all right.
Right.
That's Apple.
Meta.
Meta.
Let me
300%
talk about
up,
it from the
almost.
weekly
Look at
perspective.
that, 300% up.
Look
70
at this chart.
328.
A complete V-shaped recovery on a stock. V-shaped recovery on a such a big high stock, high beta stock is like something different. Market was way too bearish when it was at maybe sub 100, maybe 80, 90 last year, and way too bullish somewhere around here. So it had to come around and it had to give some of those gains. That's what it did. Now, there are two things that I need to talk about. One is this supply zone, which completely easily passed off and rallied past. And again, where did it rally to? Let me give you a monthly chart to give you a perfect perspective. Not monthly, in fact, rather daily chart to give you exact why I have drawn that black line there. You see here, it was a big gap down after that. This day is exactly when market actually next day broke down big time.
And the gap is from 310 to 241.
Absolutely. 247.
247, yeah.
Yeah. So this big gap, this is where exactly market retraced from. So this is a bigger supply line for me, and that is where market actually could not go past. And now going back all the way towards the supply zone, which is now a demand zone. Now that will be the key tasting time for the bulls, whether it bounces back from this demand zone. If not, then I would suspect that it would actually break down this channel as well. It
My
should hold.
my
It should
suggestion
hold the
on
demand
Meta,
zone.
my suggestion on Meta is a little bit different than Apple because they had extremely strong earnings and they guided up significantly. So Apple is something that you can watch closely and you might make some money on the short side. Meta, just be a little bit more careful because it was terrifically undervalued. Now, some people might very easily say it's overvalued, but Apple, as opposed to Meta, had weak earnings. Meta had strong earnings and strong guidance. Apple had both weak earnings and weak guidance.
So fundamentally, you would be switching over from Apple to Meta?
Fundamentally, I'll move money from, actually, that is interesting. I've moved my money from Apple out. I'm considering putting more money in Google or actually putting more money in some of the, right now I'm happy in cash. Because for me, cash is a position. A lot of people don't like cash. For me, I'm happy being in cash. If the markets are stretched or if they feel like they're going to go a little whipsaw, I'm okay not trading too much, right? But right now, I'm considering Google. And another one I'm considering is some of the smaller known names, which have had terrific earnings and have not run up a lot since the last earnings.
Okay. Okay, let's move forward, and I'll switch the chart to Microsoft. Let me go to the monthly chart here as well. Same as what it was in Apple. Just look at it. Exact V. So much down, so much up in just like 1.5 years. Now, made a new high, but momentum is not favoring the bulls. That's just 1 point. Now,
hey, Manoj, stick to this. Don't move. Go back to the monthly chart.
Okay.
So if you look at it, if you look at the MACD indicator,
yes.
Oh, the momentum is slowing on the chart on the blue line, on the blue graph at the bottom, right? At the bottom of the MACD line, but it's still positive.
Okay, so I have a different view here. I do not look at it from the positive and negative point of view from the slope of it. What I look at it from the where the price is and how the momentum is favoring in terms of the bulls or the bearish.
Okay.
So what it says here, while this, so look at this entire period, while the stock was making new high, MACD was also going continuously higher. Here, after this particular dip, it started making high again. It made a new high, but did MACD cross past this level? It did not. and now it has given back. Now look at this chart. What does this chart say? It's a weekly, sorry, on a monthly basis, it's a hammer. Sorry, inverted hammer. One bigger big concern for me from monthly perspective. On a monthly chart, if a stock is giving me such a big signal, and then it is also giving up on the weekly and on the daily, it is breaking down this channel. MACD has been consistently negatively diverged while the stock was making a new highs, and it is lower than the 20 MA and the 50 MA on the daily, and it is almost on the verge of breaking down of this channel. All this combined, the stock is definitely not bullish for me.
Yep.
Definitely not. I wouldn't be surprised if in the next 1 or 2 days, or maybe next week itself, it breaks down of this channel and then heads continuously lower for the next few weeks. Not just few days, but few weeks. This entire month, I would be very
Cautious.
not very, but rather be away from the stock for the next entire month of August.
Yeah, be very cautious this month, I would say. Well, August and September, just be cautious.
Right.
Okay. Do we have any others? Don't go there. Don't go there.
Yes, I did not want to go there, but then my chart is saying me something and I cannot just avoid talking about it. A very big megaphone on the weekly chart starting from 2018, 2019. 1, 2, 3. 1, 2. A megaphone basically normally completes in the 3 highs and 2 lows, or 2 highs and 3 lows. It normally completes and starts reversing from there. Whether it reverses entirely and goes all the way towards this, I have no idea. But this chart tells me that the market is done for now from a rallying perspective, and people should be very careful in holding their longs here at these levels. If I was holding the stock, I would get out of all my longs and just wait for the stock to stabilize. Whether this megaphone holds or not is a different thing altogether. But right now, it tells me that it should not be held on to at these highs. So I would definitely exit my longs if I was holding. I would not be holding.
And my caution for a lot of people is don't just go short in NVIDIA. Just
Absolutely.
be careful with it. Just
Absolutely. So definitely don't short. But yeah. So even so, MACD is not negative. It has actually made a new high. So that way, it is not giving you any signals from the momentum or strength perspective. But if my chart is telling me that it is definitely not very bullish, I would definitely not be holding the long, and I would just wait for the stock to stabilize and see if there is something else emerging from it.
Got it.
Yep. Next is Salesforce.
We're now looking at a daily chart.
It has broken down off a rising wedge. So I would hope I would expect the stock to maybe start falling further, because it's given 20 MA, given 50 MA, broken down of the rising wedge as well. So somewhere around this level, it should come down to maybe 198, 200 kind of a level.
Where's the supply zone?
I'm sorry?
Where is the demand zone? Sorry, where's the demand zone? 198?
198, 199.
It's at 214 right now. That's about another 10% down from here.
You're talking about this?
Yeah.
So it's at 214, yeah, definitely. So definitely more than 10%, yeah.
About 10% seems like 214 to 214.
Oh, yeah. Less than 10%, yeah, absolutely.
10%, 10 to 15% down.
Right.
Okay.
Disney. There are various patterns forming. There is some very different pattern on the monthly, but I will go on the monthly chart later. Right now, there is this Disney. There is daily chart which is showing me two kind of patterns. One, a falling wedge. Second, descending triangle. So this red dashed line, it tells me there is a descending triangle from the formation. But these two solid red lines tell me there is a falling wedge. Falling wedge is a bullish signal, and descending triangle is a bearish signal. And hence, bulls are confused. Now, why bulls are confused, I'll show you in a monthly chart. Give me 1 second.
Hence, bulls are?
Bulls are confused. Bulls and bears both are confused. I'll tell you why. Give me 1 second. Let me hide all these things and show you what monthly chart is telling me. Okay.
The monthly chart is telling me this is not going anywhere anytime soon.
This is a demand zone. That is exactly where it has been dilly-dallying for the last few months rather. This is a diamond. Now, diamond bottom normally results into a breakout but this one resulted into a breakdown. That's one. Secondly, it's a megaphone. It has already broken down of the megaphone for last 3 months, and yet it has not been breaking down.
How far is it from the 200 MA?
200 MA on the monthly is 80, 82, 83.
Okay, so it's not very far away.
Yeah, so it is not very far from the 200 MA of monthly.
The monthly.
And megaphone and diamond. All these things tells me that there is a lot going on in Disney. Bulls do not want to give up on holding the stock above this 200 MA and below this diamond and below this megaphone, and hence the stock has been kind of dilly-dallying here for last 3 months. If the stock somehow gives up on this level, so maybe around 79, 80 kind of a level, and sustains for at least a month or maybe a couple of months, the stock has very big down on maybe somewhere around here, which is like 44. These levels are very, very crucial from bulls perspective. All the bulls will start throwing their towels below 80, I would assume. Below 78, 80, bulls will start throwing their towels. And hence, I said bulls at best, both are confused, even if it is a bullish falling wedge or bearish descending triangle. This monthly candle tells something else. Monthly chart tells us something else. And hence, I said that bulls at best are confused.
Yeah, I think let's stop with that, Manoj.
Okay.
Got a lot of charts that we covered today. I know we wanted to cover PayPal. I know it's exactly 30 minutes. I don't want to get too long.
I understand.
We can cover some of these next time as well.
Sure.
But this was a good week from my portfolio done very, very well. A lot of people had the best day in their portfolio.
Not everyone has those kind of guts to be on 50% cash. So
whenever I find my portfolio is like, oh my God, I'm so happy. I'm like, okay, that's the best time to take safe bets now.
Right.
So I take a lot of safe, and I'm also a very, very nervous trader. I'm not one of those guys who's going to go for, I have no problem making small amount of cash consistently rather than going for the big one. But it's a good week. Thank you very much. Good earnings week next week. And I'll post this up. Subscribe to our channel. And thank you very much. Thanks, Manoj.
Thank you. Thank you, everyone.